Today, one of India's biggest banks has released a business update that could decide the direction of the banking sector and possibly the Nifty Bank Index over the coming weeks. HDFC Bank has reported strong growth in both loans and deposits for the June quarter. But the biggest story is not just the growth numbers. It is what these numbers tell us about the bank's future earnings, profitability, and stock price. Stay till the end because we will discuss whether this is a bullish signal or whether investors should remain cautious. Let's begin. HDFC Bank reported gross advances of around 30.6 lakh crore, showing annual growth of 15.4%. This means the bank continues to expand lending across retail, corporate, and commercial businesses despite a challenging interest rate environment. On the deposit side, total deposits increased nearly 15%, reaching more than 31 lakh crore. Strong deposit growth is extremely important because deposits are the lowest cost source of funding for banks. When deposits grow consistently, banks can lend more while protecting profit margins. Another important number is average advances under management, which crossed 30 lakh crore. This indicates healthy demand for loans throughout the quarter and not just at quarter end. The report also shows that time deposits continued growing rapidly, while CASA deposits recorded moderate growth. Higher time deposits increase funding availability, but may slightly increase the cost of funds because banks pay higher interest on fixed deposits. One of the biggest positive signals comes from balance sheet strengthening. The difference between advances under management and gross advances has narrowed. This suggests that more loans are coming back onto the bank's balance sheet instead of remaining securitized. That improves transparency, strengthens earnings quality, and increases investor confidence. Now let's understand why these numbers matter for shareholders. Higher loan growth means higher future interest income. Healthy deposit growth supports continued lending. A stronger balance sheet reduces long-term risk. If credit demand remains healthy during the coming quarters, HDFC Bank could continue delivering stable earnings growth. However, investors should also monitor asset quality, net interest margins, and future guidance during the quarterly earnings announcement because those factors will ultimately influence the stock price. Overall, this business update appears positive and indicates that HDFC Bank continues to maintain its leadership position in the Indian banking sector. The upcoming quarterly financial results will now become the next major trigger for investors. Do you think HDFC Bank can outperform the market over the next year? Share your opinion in the comments. If you enjoy banking sector analysis, stock market education, and company result breakdowns, subscribe to the channel and turn on notifications.